Hello traders, Rich here and welcome to a new episode on how to analyze any chart from scratch without using any indicators. Today we'll go over UPS. If you remember previously in episode 1, we went over gold, a commodity, episode 2, OP, a crypto coin, episode 3, as per your request, we went over AUD/USD, a forex pair. You can watch the previous results by watching the videos. They are 5 to 10 minutes long each one. So make sure to grab a coffee, tea, snacks, or even dinner. Sit back, relax, and enjoy it. For episode 4, as mentioned, we have a stock, UPS. Maybe in episode 5, we'll go over an index, US 500, US 100, and so on. So feel free to request any instrument asset in the comment section below, and let me know what you would like me to change or maybe improve for the next episode. I'm not doing any editing, just keeping it simple, pressing record, and then stop. I'm not doing like if you want an exact template, I'm just talking, right, as per the chart. So let me know how you'd like me to make it better, if possible, of course. So, as usual, for those who already know from the previous episodes, if not, don't worry, I always make an introduction. We start from the higher time frames, weekly, monthly, to get an idea about the overall market, big picture, direction, rejection levels, and then we'll be looking for setups, trades on lower time frames around these key rejection levels, because half of the work is done here on higher time frames, because once you know where you are in the market, you know what to look for on lower time frames. Now we can clearly see that UPS is overall bullish. We had this first big impulse, a correction, and another big impulse. We are currently in this correction phase. Of course, for those who are planning to hold it long term, for example, spot, we'll be looking for the next impulse to catch the next big wave. But no matter if you are trading it short-term or long-term, I'll be covering both cases for today. Don't buy blindly, no matter how cheap the price is, no matter how attractive it becomes, because it can still push lower. A big bullish trend might become a big bearish trend. This is, for now, a correction phase, but it might turn into a bigger bearish trend. So our main job is to locate areas and wait for the confirmation before we buy. Anyway, we'll go over it all step by step. And as you can see, we have RichTL here on the chart, just like the last episode. This is my baby, RichTL.com. You can get it there. It is to become objective while doing the analysis, right? Of course, if you get it, you'll get patterns, customized ones that you can't find anywhere else, a full course, community, weekly overviews, and so on. So check it out, and I'll be here if you have any questions. So let's get started. We are overall bullish, as mentioned. So I want to draw something that makes me feel this overall bullish movement. And it's very, very clear. We have this impulse and another impulse, so we can go for this non-horizontal one. Some of you asked me about how to draw the rejection, how to draw trend lines from the candle close or from the wick. You can clearly draw it anywhere like this, as long as we don't have a candle close below it. I have a full video about trend lines in my if you want channel, so feel free to locate it and watch it. So we are bullish, and as we approach the lower bound, we'll be looking, of course, for buy stops, but of course, we can still reverse from here. So we want to find more areas that are possible that the price rejected. Anyway, from this trend line, we can clearly see that we have been bullish and we are currently in a correction phase. So we can also draw another one, a falling one, to engulf this latest correction phase. Let's go for a different color. And that's it. Let's make them all appear on lower time frames, visibility, and here we go. Perfect. What we know so far is if you approach this lower band, it would be an overbought zone from this lower brown trend line and this non-horizontal support zone, which, as you can see in orange, this is for non-horizontal ones. For the horizontal ones, you can clearly see that we've got multiple rejections here, at least 3, as you can notice. So it's around the 125 round number. That's it. You can also have this one. It's a massive one indeed, around 85, multiple rejections as a resistance, then broken upward, became support, and so on. So I'll also go for the 85. Here we go. So I will not go for the low ones to save time for this video and to keep it as short as possible. So what we know so far is we have a support and the lower trend line. So this would be a very strong zone to be looking for buy setups. And of course, from a macro perspective, for the bulls to take over and start the next big wave, we need to see a break above this correction phase. Previously, the correction was falling and then pushed higher, and then here it was flat, and now it is a falling one again. So it depends on the shape, on the phase, but you get a feeling about it. But since we are from monthly time frame, we have a lot of room here from 125, for example, to 150. So on lower time frames, of course, we'll be looking also for short-term setups. That's it. And you can also go for stocks and crypto, for example, for round numbers. For example, the 200 here was a very strong area, multiple rejections. You can see it better on weekly time frame. Multiple rejections previously. The 150 also has been respected. And of course, the 100, which is the strongest one among all of them. So if you draw the 100, you can see that it is also lining up with the lower bound, the demand zone, and so on. But we might not go as low as to reach the 100 because we've got these two trend lines that might be holding the price up. So long story short, from a long-term perspective, we need to see this to buy long-term for those who are investors who are planning to hold it for a couple of months or even years, it depends on you, or dive inside the zone and then look for short-term buy setups. But starting from here anyway, you can look for buy setups. Now, if you zoom into weekly time frame, we see if we can add anything. And from this view here, I don't think we can add anything, just a structure here, previously support, a minor one, and then a resistance right there. So if you'd like, you can also draw it, which is also lining up perfectly with the upper bounds of this falling channel. Let's go for red for this one, or you can go for red for everything bearish and blue for everything bullish. It depends on you. Now, if you zoom into lower time frames, for example, to daily time frame, let me make this one appear. I'm fast a little bit, but you can slow the video down as much as you want. Here we go. Perfect. That's it. On daily time frame, you can see that we are also bearish falling channel as well. So let's draw it. And that's it. Let's go for orange for this one. Zoom out a little bit. And then make an offset for it just like this. So we are currently where? Around the lower bound of this medium-term falling channel. If you push a little bit lower, we'll be approaching the lower bound of this one in red and also the 125. So long story short, again and again, what we knew from daily time frame as new information is if you go push lower, we'll have this intersection, but starting from here, we might do a correction phase, just like previously, multiple times. It would be short term, and our target would be around the upper bound, even though we might be pushing a little bit higher to the upper bound right there. For those who are looking for short setups, this would be a very nice area to look for shorts, of course, if we get there. And also, this would be a good area to look for shorts around this area. We have a supply zone intersecting with the upper bound of this falling channel. Meanwhile, as I mentioned previously, we'll be looking for buy setups right there. On H4 time frame, we already have an objective low, and look at how clean UPS have been. Low broken downward, we push slower. Of course, all of these are objectives using RichTL. High broken upward, bullish. Low broken downward, bearish. High broken upward, we have been bullish until the low has been broken downward. And then low broken downward again, started the next impulse phase. So now I'm expecting a red diamond or dot, whatever you want to call it, to form around this area. And once we have it formed just like this, for example, or this, or anyway, we'll be looking for long positions right there. So the low is already done, waiting for the high, and then buy on break upward. And of course, once we buy, the stop loss will be below the previous major low, for example, and we target a 2-to-1 risk-to-reward ratio, which would be lining up with the upper bound of the zone and the supply zone right there, as mentioned previously, which would be a good area to be looking for shorts, just like here, here, and here as well. That's it from H4. Let me delete this one as well to keep it clean. Meanwhile, as I mentioned previously, we can still push lower. So we don't want to buy no matter how cheap it becomes, no matter how attractive it becomes, until we see the trigger that the bulls are now ready to push the price higher. Meanwhile, we can still push lower, maybe form a new pattern here, and then we'll be buying on break upward, or even go in a steep manner, dive within the lower bound of this one in red, and then we'll be looking for buy stops down there. That's how we start from the monthly time frame and zoom all the way to H4. I personally don't zoom in lower than H4 for the stock market, even though I trade on margin sometimes on H4, as you see from these setups right there. But if you'd like to zoom into lower time frames, then you can apply the same logic and keep on zooming in to lower time frames. I only zoom into lower time frames like M30 and H1 for the Forex pairs. For the crypto and stock market, the H4 time frame is the lowest I always go. That's it for today. Best of luck, and I'll see you in episode 5, hopefully next week.